Housing Finance.
Hello guys, welcome to Transcend Capital. So we took a $9.5 million Bitcoin long just at the beginning of the Jerome Powell Jackson Hole meeting, and the market is pumping, as you can see. We actually caught the bottom on BTC at this current moment right now, and we're up $258,000. What an incredible trade. We expected to have a bounce from here, and we actually were shorting BTC yesterday, if you guys can remember. If you go to the previous videos, you'll see that we actually opened our short positions at 113,600 and on Ethereum at 4,337. We closed our shorts yesterday with a total profit of 140,000 USDT, 78,224 for BTC, and 48,960, almost 49K on Ethereum. So as you can see right now, the market is pumping. There is a reversal, a strong reversal on BTC, which is a very, very good sign for continuation to the uptrend. So what I'm expecting right now, I'm expecting that Bitcoin is going to go up and revisit those highs again, which we will actually keep our long position, our $9.5 million long, during this whole trend. And this is going to be historic for the channel. And please guys, if you like the content, don't forget to subscribe and click on the like buttons. We appreciate growing this channel all together, and we're providing unique content with unique trades. We're not opening positions with a smaller size. We're trading big large positions on major pairs, and we'd really appreciate your support.
And for good reason, right? These companies are putting up great numbers. Every company across every industry is investing in AI and technology. So if you had uncertainty around policy or economic growth or geopolitical tensions or international relations or, fractures in the U.S. consumer, everyone was crowded in this space. That said, they're not crowded because these are companies with, they're crowded because these companies have great fundamentals and the path forward looks great. But what we'll have to see as we go into the back end of the year.
What an incredible trade, guys.
Numbers, or if we get inflation that's a little bit too perky, if we get rotations in the market. I think some of the rotations in August into the small cap was unwarranted, in my view.
So we are sitting here after digesting that speech, and I'm going to have to go read it about 3 more times to really internalize all of the complicated messages laid out by Jerome Powell in his last speech as Fed chair. Mike, before we continue, Michael McKee here, our chief economics correspondent, can you just wrap through some of the key headlines once more so that we can really understand just how big of a policy shift in some ways this really was?
Well, it's a policy shift, but one that has been signaled for a little while, which is why the markets have been buying into it. But Powell basically accepted the market's argument that it looks like the labor market is weakening, and that is a threat to the overall economy. And inflation is rising, but it may not rise as quickly as the Fed had feared. And so therefore, the door is open to a rate cut if we get supportive data from the CPI and the employment report that we get at the beginning of September. Now, the thing about what he said today that I think is important is once you open the door like that as Fed chair, it's almost impossible to close it. It would take a lot in these data points that are coming out to change that view. And the market's going to go overwhelmingly towards the idea of a rate cut. So he's pretty much baked it in at this point. So I think what then happens is it goes to Kate's point about where we go from there. The focus will be on the other 2 meetings this year and then what you do into 2026. And I think if you ask the chairman, he would say, we don't know yet. That's the data dependent part. But for right now, we're going to give you what you think you need.
And right now, what you are seeing is almost a certainty priced in for a rate cut next month. But Kate, one other thing you're seeing is weakness in the dollar on the heels of this.
Yeah.
Do you expect that to be very much an ongoing theme, and it just kind of edifies it, given that this is taking the more dovish approach?
Yeah, we had a pause in terms of the weakening of the dollar after a really vicious weakening in the first part of this year. And I've heard a lot of currency strategists say, say, you know, we're going to tread water for a little bit. We've made a lot of the adjustment. But if the market really believes with high conviction that we're going to continue on a rate cutting cycle, you know, I think it's fair to assume that the dollar would weaken a little bit. I think most people would say over the longer term, they agree that the dollar has been overvalued for a considerable period of time. And I expect that we'll see a little bit more of that adjustment. On balance, though, I think we're going to see, you know, appreciation in some U.S. assets, particularly the U.S. equity space, even as the dollar weakens a little bit. And I'm hedging some of the stuff and some of the concerns I have in the portfolio around uncertainty and perhaps pick up in volatility in September into the beginning of October with a little bit of gold.
Interesting. We'll catch up with Kate Moore. She's going to be sticking with us, Citi Wealth Chief Investment Officer, as we get through all the headlines and get some commentary. Joining us now is someone who is very familiar with these types of speeches, St. Louis Fed President James Bullard, who recently was in the media talking about his preference for 100 basis points of rate cuts this year heading into 2026. Also a potential contender, I should say, to be the next Fed chair. Jim, how much are you seeing what we heard from Fed Chair Jay Powell and seeing anything different that you would really say if you were at that podium?
He used the speech to solidify expectations for 25 basis points in September. I was expecting that anyway. Markets were expecting that. He leaned into the most recent labor market report, which was very soft. And so I think that's a done deal. He didn't say too much about beyond that, what you want to do with the October meeting or the December meeting. I have said 100 basis points, going into 2026. So I think you could adjust as you go forward and eventually get a full 100 basis points, but I would go slowly in order to watch the data. And then on the framework review, I'm sure much earlier in the year, they had targeted that they would have the framework discussion and that they would use the Jackson Hole speech to talk about changes to the framework. I thought those were thoughtful and they were well presented in this speech, and they're about what many have speculated on. So I think they did about as much as they can on the framework side.
Jim Bullard, Tom Keenan, good morning to you. I definitely consider this my conversation of the day. You served a lengthy term at the St. Louis Fed. You have lived the decline of a greater economy decades and decades ago in the effort to provide for a resurgent St. Louis. As the next chairman of the Fed, whoever that may be, do they have to manage for two American economies, a technology-driven, exceptional economy, and another, to use a cliche, America flat on their back? How would a chairman execute those two Americas? Just everything all the way around.
Yeah, I think income and wealth distribution have become more salient topics for the Fed. It's not that clear how much the Fed can really do. Providing interest rate policy for the whole economy. If you change the rate structure, that affects everyone, not just one particular group that you might be targeting. So I think that's